Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Tuesday, October 14, 2014. All right, so not much happened today in the end. The market went down, the market went up, or I should say the market went up and the market went down. So let's take a look at an intraday, and then I've got some interesting things for the next couple of days. Well, let's look at a 60-minute first because I want to save the 10-minute because I have something there. The 60-minute, okay, so we started the day and we went up, and then basically the market failed at, let's call it the 191 level, and then sold off basically for the remainder of the day with a little bit of a bounce at the end. And basically what happens is, you have to understand this. People are looking for a bottom in the market, and you're never going to have a bottom with a gap up the following day. It just doesn't work like that. The market needs some kind of reversal. You're not going to have, finish on the low yesterday, gap up today, and everything's fine. It doesn't work like that. What I would have liked to see is a gap down and a reversal, but we didn't get it. So you can get the swoosh down intraday, and then you can get a reversal, but we got none of that. So the market hasn't bottomed yet. But here's what I want to show you. Let's go over to the 10-minute because I have an idea for the next couple of days. So first of all, let's go back to the daily and let's get a point of reference. All right. Sorry to keep jumping around. The daily on a point of reference is 185, give or take. Okay, it's 184 to 185. All right, call it 184 and a half, whatever it is. It's in this neighborhood. Okay, I can't narrow it down to the penny. It's a fool's game, but call it 184 and a half to 185. That's about as close as I can get. Now, can we overshoot that? Yeah, of course we could. But I think you'll find some daily support in here. Now, so that being said, where are we on the 10 minutes? So at the end of the day today, it looked like we were going to melt away. We actually broke these lows from yesterday, and then we reversed. And on an intraday basis, on a 10-minute chart, I can make a case that this was a bottoming tail, and this is bullish right here. You had a big up candle, and then now you have two sideways candles slightly down. We put another one or two in tomorrow morning, and we can go off to the races, or we can just go off to the races tomorrow. And the reason I say that is a little bit of a tell. The market is up after hours. The futures are up. They were up as much as 8 points on the S&P this evening, and right now they're at 1882, up 7.25. Now, there's no reason for that. You had a little bit of BS talk today. You had some Fed governor somewhere talking about QE4. That's nonsense right now, but don't put it past the Fed. They may come out with some program because they just can't stand the markets to go down. What they don't understand, or what they can't admit, is the markets drive the economy, not the other way around. You don't hear about the economy weakening as the market's going up. The economy's strengthening as the market's going up. But the minute the market comes down, like it has been over the last several weeks, now you're hearing talk about the global economy slowdown and the economic slowdown and this slowdown and that slowdown, but you never hear it on the way up, okay? So it's the market first and everything else second, even though everybody thinks it's the other way around. So my point is that the market cracks. Everybody starts talking about a weak economy. The Fed hops on. They succumb to public opinion, and they come out with a program. That's kind of the longer-term view of what I see happening. Anyway, so let's get back to tomorrow and then beyond. So tomorrow, let's say we're up tomorrow. If we're up tomorrow, I'll tell you right now, 70-30, the market's down on Thursday. Why? Because Thursday, and I work with cycles. I work with longer-term cycles, and I work with shorter-term cycles. And I have a shorter-term cycle that's due on Thursday. Now, I can't say it's going to be down because the cycle is a turn date that is going to normally be the opposite of what the previous day was. So if tomorrow's down, then I would look for an up Thursday. If tomorrow's up, I look for a down Thursday. So there you have it. That's what I think is going on the next couple of days. and we'll play it by ear. Remember, we're probably not in the clear until we come down to the 185 level, give or take. Okay, we're probably not in the clear, and it's not that far away, but it's going to look ugly on the way there because they're going to start talking about other numbers. And yes, other numbers are possible, and another time other numbers will show up. But right now, I think the market is better suited, due for a bounce after the 185 give or take number, and most likely what'll happen is you'll get a huge rally off that. It's a rip your face off, cover the shorts, big time rally. S&P will be up 40 to 50 points the first day, and the NASDAQ will be up 100, and the Dow will be up 400, and we'll go from there. And then it'll last a couple, 3-4 days, and then we'll come back and we'll test the lows again. We may not get there, but it'll whip down again, and then towards the end of the month, the stronger seasonality period will begin. And if the market has made some kind of a bottom, you can look for a rally sustained for a while, and then we'll address what happens after that at that time. But that's what to expect, give or take. Now, who knows for sure until it happens, but that's the projection of what I see as the highest probability for the market. Now, I want to mention one more thing, because we always talk about these tells, and last night I showed you a tell, okay, of the IWM, or the Russell 2000 index. Oh, talking and typing. There you go. Okay, so I showed you a chart of the Russell, and what I said was it wasn't down nearly as much as the market. It was down 0.2% yesterday, if you remember that. Okay, now, let me just, well, you know what? I don't have to do that. So today, all right, the S&P was up almost 3 points, 0.16%. The Dow was up, the Dow was down a little less than 6 points, okay? That's flat for all intents and purposes. And the NASDAQ was up 13 points, but 0.3%. Now, the IWM, okay, was up, pardon me, let me just get the percentage. I have another chart here. 1.7%, or that's in the aftermarket. Yeah. All right, well, whatever. So even in the aftermarket, it's up. So call it 1.5% for argument's sake. It's up a little bit in the aftermarket, but it was up well over 1% when all the other markets were either down to flat, nothing going on. So yesterday, the IWM outperformed the other markets. Today, the IWM really outperformed the other markets. It was up a lot higher. It was up at 107 earlier in the day, and it sold off below 106 and then came back. So what I'm saying is that this is another tell. The strength is coming into the small caps first. Nobody's noticing it. You're hearing it here first. This is definitely a tell that the market has some underpinnings of some strength. Now let's look at another area that's equally as important. Let's look at oil, okay? Now, oil today had one of those days. The price of crude was down like $4 today, okay? It hit, let me go to my futures on another screen here. It hit, bear with me, got to go to the daily. Okay. It hit on the low 81.32. Now, if you remember last night's video, I told you that oil was going to go to 82 to 82.50. That was the downside target. So we pierced it by $1 and we came back, and now oil's trading at 82.24. Now, I think that this signifies some kind of a bottom for oil. Now, the oil chart looks the same as USO. I just can't get the oil chart on this platform that you're seeing. So I use the USO. But let me show you what happened intraday. First of all, The volume, you can't see it on the screen, the volume on USO was 15.5 million shares. What does it trade average? 4 to 5 million shares a day. Triple volume, okay, that's called an exhaustion move. All right, now let me look at the intraday with you. Okay, you see this? This is a true bottoming tail. Why? Because it happened at the bottom of a chart. Okay, we haven't been in this low in quite a while. Okay, it happens at the bottom of a chart. Okay, we reversed up, and now we're going sideways. And you see this here, this up move with these sideways inside candles here. This is going higher, I think, anyway. At least it looks like the probabilities are it's going higher. So that's another sign of a tell. Not everything bottoms at the same time. Not everything tops at the same time. Remember, one of the first things to sell off is technology, or one of the first things to sell off is biotech, or one of the first things is healthcare. Whatever it is, it cascades. They go from sector to sector to sector, hitting them one at a time. It's called sector rotation. You have sector rotation on the upside, and you have sector rotation on the downside. Well, the same thing goes here. This is the energy sector that was way oversold, just cooked on the downside. Okay, let's look at the XLE, which is the Spider Energy ETF. Okay, look at this thing on a daily chart. All right, it's just been taken to the woodshed. Comes from $100 to $80 in, couple 3 months. All right, so that's just taken behind the woodshed. Look at the weekly chart. It's just unbelievable what happened to this thing. Okay, so you have the OIH is another one, oil services sector. Talking and typing. Okay, same thing as the XLE. All right. Go back to the USO. What is this? Okay, here you go. Weekly chart, all right? There is a bottom, folks, and look what happened today. You pierced this low, and I identified this low with you a number of times. I didn't necessarily think that it would get all the way here. Sometimes you don't know, excuse me, sometimes you don't know how USO is going to trade exactly or correlated with the price of oil because they're not exactly the same. There's a cost in USO which kind of depletes some of the gains sometimes, or some of the price that's taken out on a daily basis. So the numbers are off sometimes, but I definitely identified this low with you guys, and I know that this was going to hold, because at least temporarily, because it's a huge low. Okay, so that's where we are in oil. I know this video is getting long-winded, but let's just cover gold real quick. Nothing happened in gold today. This is the weekly chart. Let's go back to the daily. Nothing happened in gold. It was basically a nothing day. However, there's nothing wrong here. I had told you yesterday I thought today would be a down day. It was scheduled for a down day anyway. Well, it was flat. But as we speak, okay, gold is down in the overnight session. Gold futures down $4. So, maybe that top is playing out. Maybe it's not. If it's going to go down, I would look for about a $10 to $15 move in the price of gold. And if it finds some support around the 12.15 level, give or take, I think we could have one leg higher. So that's my take in gold. And I think that's it for tonight, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.